Hi everybody, this is T1H Trader, and this week we will be reviewing my March 1st to March 5th trades. Right? So my week in summary, my best day this week was actually Wednesday with a plus 1.5 hour gain, and worst day was Friday with a negative 1 hour loss, and I will be reviewing Wednesday, Friday, and Monday. Monday because I learned something that I thought would be really nice to share with everybody. Okay, so on Monday, my first trade that I took was XRAY. I didn't. Okay, so as we can see, right, on XRAY we have this bottoming tail right here, and the pattern that I took was this breakout over here, right here. I really liked it because it was showing relative strength to QQQ, so we can see that QQQ is sort of dropping downwards. But the thing is that on XRAY we're sort of consolidating within a particular area. So the gap was also really nice on the daily. It's not here, but you can go and check it out on the daily. It's a really nice gap. The negatives is that you could sort of argue that you're taking this retest entry into a sort of square top around the $59 area, but that is kind of a stretch because I think that's just 4 bars, doesn't really count. The risk to reward area is also an area for concern because the 59 area to 59.50 area seems to be sort of holding, so that would be the negatives. But I think that given the relative strength that it has compared to this huge market fall off and how it's consolidating in this area, it was a nice trade to take overall. Okay, the ones that I want to talk about on Monday are actually this one on WMT. Right, so in WMT, there are actually 2 patterns here. The first one is a momentum 3-bar play right on the 1-minute chart at the 939, 940 area. So we can see a wide range bar that ignites and a nice bottoming tail below it. And we also have a second resting bar, and both of these are on nice increased overall volume. So this first bar doesn't count because you can see that the volume here is not large enough for it to constitute as high volume. Okay, so that was why I really liked this 1-minute momentum 3-bar pattern, and eventually it did go on to hit target. I didn't get filled on this entry, which is kind of sad. So I decided that I'll go in on the second entry, which was a sort of flag pattern on the 2-minute. So you can see this is the flag pole, and this is the flag. Alright. So what I want to talk about here is that I actually set my stop loss for WMT around 131.60, 131.70. So around this line here. And normally, when I take trades, I normally try to hit my target, and then I'll exit my position. But in this case, because I saw a 1, 2, 3 triple top right here, I decided that, it appears that the 132.50 area right here is going to hold for the rest of the day, and so I exited my trade. Honestly, I have no idea what happened afterwards. You can go and check. But I think that exiting when you see a very strong resistance point at 132.50, when you try to go long on it, it's a good idea to minimize your losses. Next trade that I took was STM, and this is the same exact scenario. I took it as a 1-minute breakdown pattern right here that came from a failed, not exactly failed, more like a pattern that didn't trigger, a momentum 3-bar pattern that didn't trigger 1, 2, 3, but it didn't trigger. So I took it, and I thought it was pretty good also because it was showing relative strength to the market. So you can see how SPY is rising here, but STM is actually decreasing over here. Of course, I would have liked the consolidation to be slightly cleaner, but it is what it is. Range was also definitely a concern. You can't really see it again, it's just on daily, but it actually didn't really have that much room below based on how much the stock normally moved per day. I think it moved about $1.25. So trying to hit a target would have been a challenge. And again, this is here because you notice how it formed a sort of double bottom right here one time and right here another time, right? So at this point of time, I decided that I'll exit my position as well because, combined with the fact that it actually didn't have that much room to go and that it formed a double bottom, I decided that I'll exit my position earlier, and I actually had a small 0.5 hour gain on it. As I think you can see all the way back here, STM. Oh, shucks, I took a loss on STM. My bad. But yeah, I exited the position and I took a half-hour loss instead of a 1-hour loss, which was here because I decided that I would move my stop loss down when I saw the double bottom. And I think that this is something that you should definitely try to implement in your trading moving forward. Okay, Wednesday. Wednesday first trade was LVS. LVS, we can see it right here. I considered this as a buy setup, but actually after further analysis, right, I decided that it wasn't that good of a pattern. Originally I liked it because you can see, right, nice move back up, about a 50% retracement, 40% retracement, right at the MA, room to go higher. So that was why I liked it. But upon further analysis, I realized that actually LVS had such a huge drop, and it just took out the entire initial gap. So the initial gap was from here to here, and this move down just took out everything. And because of this is more of a sign of bearishness than a sign of bullishness. So even if it did retrace all the way back up here to 80%, this was still overall a very bearish stock because of this initial move downwards. Alright, so next pattern, ROST. So ROST, you can argue that this is many things. This is a 1 minute breakdown, this is a 2 minute breakdown, or this is a 5 minute momentum 3-bar pattern. These are all considered legitimate patterns. The negatives are that, you can't really see this, but on the post market, on the previous day, right, there's actually a sort of resistance around the 1 month 2 area, but that wasn't that much of a concern because with my small stop, I also had a small target, and I believe that it could hit 1 hour overall. And yeah, that was why I took it. Next one we have is on ROST again. ROST in this case is actually a sell setup. So we can see that this is a breakdown that I showed on a 1 minute chart just now. So it went down and it retraced back a bit. So you could have entered here with same target at about 112 area. I thought that this was also a pretty decent pattern, but again, I didn't enter this because you might have noticed, right, that this line right here is where I put my stop loss out. So I actually stopped out of the pattern, and just as I stopped out, it actually triggered this new sell setup pattern. So I guess that's like a learning point. Just because a trade stops you out doesn't mean that it can't be giving you another pattern on another time frame, right? Okay, next trade is Friday, right? Friday we have one at BAC. BAC is really nice. This is as clean as it's going to get on a momentum 3-bar pattern. Wide range igniting bar with nice volume, kind of a little bottoming tail here, resting volume on the second bar. Yeah, it was just good. It was just good all around. I think that the only reason why this failed was because the market sort of failed with it. You can see that the market just went all the way down till about 11:30, 11:45. And I think that this is a very big reason as to why this BAC pattern overall failed. And this kind of patterns, you can't really do much about it. Market failed, so you kind of control the market. And yeah, given a choice, I would take this pattern again. I think it's that good. I don't regret. Oh wait, you don't see it on the fill because I put in my order, but I actually didn't get filled, and then it went all the way to about 37.60-ish. And at this point of time, it was going to hit my 1 hour target already. So I decided, heck, if you're going to come back down and fill me, that's going to be a sign of bearishness than a sign of bullishness. So I canceled my order. And yeah, so it didn't fill me on this third bar. It could have filled me on the fourth bar when it came back down, but at this point in time, it has reached about your 1 hour target that you probably should have just removed your order, because that would have been a sign of bearishness than a sign of bullishness. And finally, the last pattern that I took was EOG. EOG is horrid. I took it here, about 74.30 by 73.50. This was just a horrid pattern. I took it and I was like wondering to myself, why do you take it? 1, 2, 3, 4 green bars up and you're trying to go long on it in a market that, yeah, it's just a bad pattern. I think that the main selling point here was that the market was kind of starting to sell off, but EOG was still going up. But yeah, I regret taking this pattern. I regretted it the moment I got filled, actually. So it is what it is. We learn as we go. So yeah, this is my weekly trade review. If you liked it, you learned anything, leave a comment, subscribe, like, and you can find me on Reddit at T1H Trader as well. Thank you, and I'll see you guys next week.